new job data came out today that's showing that the unemployment numbers and the quit rates and the participation rates in the US are starting to become concerning, especially when you think of it from the point of view of an operator and individuals whose businesses rely on human capital or workers to get done. So as an overview, 4.4 million workers quit their jobs voluntarily in September, which was up from 4.3 million in August. This, of course, is the highest in about 2 decades. We haven't seen numbers this high for a long time. And getting a little bit more granular, nearly 1 million workers quit their jobs in the leisure and hospitality industry alone. And we'll come back to leisure and hospitality when we start to discuss the ramifications of this kind of number and why we're starting to see this number, or the delta between the number of open jobs and the participation rate not close. So there's so many things at work here. There's 75 unemployed workers for every 100 job openings in September. So that's the lowest ratio on record. Which it's that gap between the number of people that are working and the number of open jobs is really starting to become a bit of an issue. One reason, of course, is that we're starting to see, as we come into the tail end of 2021 here, the vax mandates come into play. And of course, people, who have their beliefs around vaccines and things maybe can't participate in the roles that they used to, or can't participate in the jobs. And companies also have mandates as well that are limiting people to from working if they haven't been vaccinated. So that's one factor that goes into the number of quits, and then of course the delta between open jobs and participation rate. Another reason, of course, is the shifting sentiment around low-wage work. I think this is something that we've talked about in other videos on this channel, where because of the last 18 months and all the stimulus that's been pumped into the system, you're starting to see a shifting narrative or a shifting idea around what low-wage work means. And people are just not as willing at the moment to go and take on, what used to be considered a low-wage job. So the services, food sector, hospitality, leisure, all those kind of industries that typically relied on large human capital bases, but traded that off with lower wages, are seeing it very, very difficult to attract the level of worker and the volume of workers that they need to function. We're starting to see, of course, we're coming into the tail end of the year and going into that holiday shopping season. Lots of major retailers are requiring, they need to hire hundreds of thousands of workers. And where are these workers going to come from? I think that's an interesting facet or an interesting area of the economy to look at in terms of the health of the working dynamic. But the idea that low wage work is changing and companies are having to raise wages, to meet the floor now that's being set for certain kinds of jobs is another function or another factor in what's happening with monthly quits. I think that because there are so many open jobs, and I'm sure if we went granular about it and looked at different verticals, you'll see that the consumer-facing sectors or the consumer-facing roles in different sectors are the ones that are harder to fill. Those roles are harder to fill. You're starting to see those individuals trade off or put companies against one another in terms of who's going to provide the higher salary. Who needs me more? I imagine is the question that gets asked. And as soon as work starts to feel like work for an individual, the first thing that comes to mind is, I don't need to do this. I can probably go get another role somewhere else that pays me a little bit more, incrementally more. And that's what's happening. And so you have a lot of churn in the low wage arena of the workforce. And so this number, 4.4 million, doesn't look that different to the 4.3 million in August. And one thing I think that's happening there is just individuals churning through lower wage jobs. And an issue that raises, of course, because the number of open jobs is at 10 million, and you've got these 4 million workers that are quitting. if we don't, as an economy and as a country, figure out how to drive participation back from those who've left the workforce permanently. You think of the people who've retired early, or people that, as a function of the last 18 months, just decided that they don't want to work anymore, that they've got other things that are more important to them. If we can't pull them back and participate in the economy, in the workforce, this level of churn, I think, is going to continue. And what does that mean for so many different kinds of roles and so many services if talent just keeps moving around trying to find the next highest paying job? What I don't think is going to happen is that equilibrium. It's human nature. People can always see themselves making a little bit more money, and so I don't think there's an equilibrium point where, okay, whatever you want to put out there as a hypothetical, 25 an hour, whatever. You can always see yourself making 26 an hour if you're making 25 an hour. So the idea that, okay, what needs to happen is churn needs to happen up to a point where wages stabilize and okay, that becomes the floor. I don't think that happens. And so this gap between, the people who are working and the number of open jobs can't get smaller unless, one, we get the churn to stop, and also we get increased participation. So that's one thing that I think, intuitively, when you look at these numbers and you look at the kind of dynamics that are happening in the workforce right now, that's a little bit dangerous. That supply and demand and what that means at a macro level. So, the numbers coming out, of course, are not surprising if you're in the space where you're looking at the job market all the time. If you're looking at think of your own life and as you drive around or walk around, are you still seeing the for hire signs all over your city or all over your town, all over your neighborhood? I know I am. And so, until we start to see those kind of things come away, I think we should expect these kind of numbers coming out. And until we can increase participation with individuals who have left the workforce, the retired or the people that have pulled forward retirement, I think that this is going to be an ongoing issue. An interesting trend too. If you look at the chart of the number of people who left their jobs voluntarily by month, this has almost been a 45-degree, or maybe less than that, a 35-degree incline since about the year 2009, so right after the '08 crash. And we haven't really done anything as an economy to slow that down. And so there are questions around policy and different things that I think need to be had, because taking away the 2020 crash or the 2020 dip in the number of people who left their work voluntarily, the kind of the trajectory of the slope of that line since about '09, it's pretty steady. Even when we think of the crisis that's happening today, it's really no steeper than it was on its natural trajectory. So this has been an issue that's been growing. I think the pandemic, of course, has raised it gave everybody a little bit more incentive if you were inclined to leave the workforce, retire or pull forward your retirement date, or you had things like healthcare or other different reasons why you would want to leave. And gave everybody a little bit more incentive. But trend-wise, this has been on the agenda, at least for some time. And so there are definite questions that I think we need to have as an economy about participation, incentivizing participation. Otherwise, this is a number that I think we should continue to expect as we go forward. I don't see a way in the really, really short term to where this levels off or falls, unless something dramatic happens in the workforce, or at the policy level or at the corporate level.